Congratulations, you've saved up a deposit and you're ready to take the next step towards buying your home. But where do you even begin? Applying for a home loan can be a daunting process, especially if you're a first-time home buyer, and that's where we can help. In this video, we're going to take you through the entire process of consulting with a mortgage broker. We'll start by introducing you to what you can expect when you first meet with a mortgage broker. This is where you'll lay out your financial position and the purpose of the loan. It's crucial to establish your goals, objectives, and milestones because taking out a home loan can affect all of this. Your mortgage broker will be your go-between dealing with the banks and other lenders to arrange a home loan for you. They'll help you understand the different loan options available and explain how each one works, what it costs, and why it's recommended to you. So the first step is detailing your goals and timeframes. Let's talk about the most important step in securing your dream home. It is setting your goals and timeframes. Because let's face it, taking out a home loan is a big deal and can impact your future plans. That's why it's crucial to work with a mortgage broker who understands your situation and goals. During your initial consultation, your broker will take time to get to know your why behind your objectives. They'll ask about your requirements and future plans, so come prepared with a list of questions and be ready to discuss your milestones. Remember, there's no one-size-fits-all approach when it comes to home loans, so your broker will explain all the options available to you, including the costs and benefits of each. And if you're not quite happy with them, that's fine. Don't be afraid to ask for alternatives. It's your broker's job after all to find the best home loan for your needs. Also keep in mind that even a small difference in interest rates can add up over time, so your broker will help compare loans from different lenders to find you the best deal. And that's not even the best part. Your mortgage broker will not only assist with your current requirements, but also your future property purchases and refinances, whether it's an investment, commercial property, or just looking for a better rate. So if you're ready to take your next step towards your dream home, get in touch. At Hunter Galloway here, we help home buyers across Australia set up their goals and timeframes towards buying their first home. Step number 2, investigating borrowing capacity. Once your mortgage broker is up to date with your requirements, the second step in the broking process would be to investigate your borrowing capacity. To do this, your mortgage broker completes a preliminary assessment. This is a very detailed process where the broker will identify any problems you might have from a lending perspective. They'll look at your income and expenses, your banking behavior, and ability to fill your existing commitments like credit cards and also your savings patterns. At the end of this, they'll be able to calculate your borrowing capacity or borrowing power. But what exactly is borrowing capacity? Borrowing capacity or borrowing power is the maximum amount of money a lender is willing to lend you. Keep in mind, each bank has its own assessment rate based on the level of risk they're willing to take on, which means your borrowing capacity or borrowing power may vary from lender to lender. Some banks even have different buffers built in, so they're going to want to protect you if interest rates change more, which means they're potentially going to lend you less. To calculate your borrowing capacity, the broker is going to need to know some additional details like the number of applicants, if you've got any kids, your annual salary before tax, and any other regular income you get, maybe rental from investment properties. They'll also look at your living expenses, your financial commitments, combine credit cards, store cards, overdraft to take into consideration when calculating these numbers. With all these figures, your mortgage broker can assess the lenders that can assist and compare the most suitable loans at the sharpest interest rates. But to get to that, the next stage of the mortgage broking process involves seeing if you qualify for any government grants or incentives. So let's go through that. Number 3, grants, incentives, and eligibility. Now we're going to look at the different grants and concessions on offer for first home buyers across Australia. The First Homeowners Grant has been around the longest. It's a one-off payment designed to help home buyers purchasing a property. The grant is available nationwide, but the amount and eligibility depends on which state or territory you're in. These days, most of the first homeowner grants are available only for a brand new property that's never been lived in before. So it's not available on existing homes, and you have to generally live in that home for a minimum of 6 to 12 months. So it's not going to work if you're going to turn to an investment pretty much straight away. Some states and territories offer reduced or waived stamp duties for first home buyers. This could save a considerable amount of money, so it's definitely worth exploring and whether you're eligible. The best scheme of all, in my opinion, is the first home loan deposit scheme. This is the one that helps if you're really struggling to get a deposit, where the government pretty much acts as your guarantor. They guarantee your low deposit, and it means you can buy for as little as 5% deposit if you're a first home buyer, or if you're a single parent, you only need a 2% deposit. Now, there are differing criteria on this depending on your income and the purchase price. Hit us up if you want to know if you're eligible for that. We're helping a lot of people at the moment with the home guarantee scheme across Australia. Step number 4, comparing the different types of mortgages. Now that your mortgage broker knows how much you're eligible to lend, any issues you might have with your work and borrowing capacity, and your eligibility for schemes, it's time to compare the different types of mortgage and select a product. How do you pinpoint the perfect product in your unique situation? In step 4 of the mortgage broking journey, your broker will lay the groundwork for your upcoming home buying purchase. After revisiting the goals and objectives that you set in step 1, the broker is going to delve into an explanation of the loan options, which will ultimately lead to a tailored recommendation for you. As part of this process, we'll understand what deposit requirement, how much deposit you have to put in, including stamp duty, Understand what banks are willing to lend to you based on their policies, identify what rates and features are suitable, and learn how to structure your loan for maximum cost effectiveness. As I mentioned earlier, these options are ultimately going to be up to your borrowing capacity, because if there's a bank advertising some crazy low rate, but they won't accept you over time, then you're not going to be eligible for that loan. Your mortgage broker will guide you on deciding whether a fixed, variable, or even a split loan is best for your circumstances. A fixed rate loan is set for a specific period, typically 1 to 5 years. A variable rate sees the interest rate fluctuate over the life of the loan. This is either in response to the Reserve Bank of Australia adjusting the official cash rate, or due to a strategic decision by your bank. As to which is better as fixed and variable, this is where your broker will detail the pros and cons of each in your situation, depending on what you're looking at doing. If you're looking at selling in the short term, if you're going to hold, if you're going to turn to investment, etc., they'll work out the best mix for you. If you're not sure it's going to be right for you, as I mentioned, hit us up. We'll have links below. Step number 5, the mortgage application process. You've met with your mortgage broker, gone through loan options, and now chosen a lender. Now it's time to prepare and submit your application to that specific lender. Let's go through the final part of the mortgage broking process and explain how loan application works and how they actually process your loan. The next phase in the home loan application process is filling out the bank forms. Banks and lenders typically require your mortgage broker to ensure they complete a privacy consent form. This grants the bank permission to gather and disclose your personal information and credit information. This is the part of the process where your broker collates your income documents, expenses, and liabilities and sends them off to the bank. Once your mortgage broker has compiled all your supporting documents, they'll submit it to the lender and await your conditional approval or your pre-approval. Once a bank issues that conditional approval or pre-approval, generally say, yep, we're happy to lend you the money subject to a satisfactory valuation. In other words, the bank needs to be happy with the property that you're buying and that your conditions don't change. You don't lose your job or you don't get less deposit over the course of the next 3 months, which is typically the length that pre-approval is valid for. So this is the point where you can go out, start making offers, potentially attend auctions and secure a contract on the home that you want to buy. But then what next? Once you secure a contract, you get back in touch with your broker. They then send the contract to the bank. Potentially they might need a couple of updated pay slips, depending on how much time has lapsed from that conditional approval. And this is the point that the bank will potentially order a valuation. They'll send someone out to inspect your property and issue your formal approval. It's all looking good. That's it. You're unconditionally approved. The loan is yours. Almost. Once they issue that formal or unconditional approval, you send it to your solicitor. You're pretty much all good. You just need to complete a bit of paperwork. After this point, they issue loan contracts. Sometimes these are done by DocuSign. Sometimes there'll be paper documents. Your broker will help coordinate them and make sure they're returned to the lender along with any additional documents they might need. As far as executed contracts, if you're in New South Wales, for example, you might not have that at that point, or insurance documents. In between this point and settlement, which is when you get the keys, the bank will verify all the documents, complete all the checks, and speak with your solicitor to issue the final funds to get your new home. Your solicitor will then coordinate settlement. The bank pays the money on the settlement day, and suddenly you're a homeowner. Even after settlement, mortgage brokers typically extend their services beyond. So we can assist with reviewing your interest rate, switching your loan product. If you, for example, started with variable, we can help with switching to fixed afterwards and keep an eye on your property's value, helping you make better decisions over time. And there you have it. That's the 5 stages of applying for a home loan with a mortgage broker. Did you know at Hunter Galloway, we're mortgage brokers? We help home buyers all across Australia. There's no fees for our services. We help home buyers every day and we'd love to help you out. If you're thinking about buying in the next couple of years and just want to know what your borrowing capacity is, or if you're further along and want to get a pre-approval, hit us up. We'd love to help you out. You can find out more information at huntergalloway.com.au. And if you like this video, leave a comment below. Let me know what you thought was the most important part of the mortgage broking process. Thanks so much for watching. Appreciate your time and have an amazing day.